some more background for you for this next question. There's a lot here. I'm going to take notes. The funding for the state contracted human service provider system now totals some $2.3 billion. That's about 8% of the entire state budget. In 2008, after more than 20 years without a cost of living adjustment to contracts, the state enacted Chapter 257 to bring fairness, adequacy, and transparency to the rate-setting process. But implementation by the administration to compensate for inflation, consider geographic factors, and unfunded mandates, all required by the law, have been inadequate. The Executive Office of Health and Human Services conceded that their procurement policies significantly caused the poor financial health of providers, presenting considerable risk, not only to the clients of the Commonwealth, but also to the workforce employed by these organizations. So, here's our question. As governor, with little to no increases expected in revenue, will you, 1, maintain the status quo, 2, increase reimbursement rates to provide proper funding by buying fewer services or serving fewer clients, or number 3, reallocate more dollars into the system to improve the financial health of the sector and to assure service quality? Charlie Brinker, we'll have you respond first.
I think the answer to this is yes. Look, I would say a couple things. The first is, when I talk about regulatory reform, I'm talking about the cost of regulation, both to the provider, to anybody who's regulated by the Commonwealth, as well as the cost of actually overseeing, managing, monitoring, enforcing regulations. We pay for this twice when we overdo it. And if you think about health and human services, we have multiple regulatory policies in place for what in many cases are sort of the same thing from place to place. Coding and billing and case management, medication administration, intake, it's residential programming. I mean, you have literally agencies that serve, providers that are providing services to the same agencies, in many cases in the same ways, with completely different sets of rules and requirements around virtually everything associated with their relationship with state government. That is really expensive on the state side, it's really expensive on the provider side, and in many cases it's non-value added. So, when you get into this question about number 3, reallocation, I think there's huge opportunity here to create a much simpler and less complex way of doing business. I think it would save everybody a lot of money. I also think that the big issue with 257 is we have to pick the places where we can go and agree. This thing is like eating an elephant, it's got to be one bite at a time. And I think there are a lot of things we should do with 257. And what I will tell you is in 4 years, I will guarantee you will be happy with the way 257 works by the end of that 4th year. But I think we have to figure out a path to success.
Thank you, Charlie. Thank you. Tim Cahill.
I'm going to try to keep it straight if I can and keep it simple, but I don't think this maintaining the status quo on virtually anything in government, I don't think is a good idea right now. I don't think we can ever say that we'll maintain the status quo. We always have to try to achieve better. We have to work to get better every single day, and we have to do more with less. We're not going to have increasing revenues, I think that's pretty clear. One way or the other, we're going to have to fight harder and divide up the pie. If it's shrinking, we're going to have to divide it up even tighter. So reallocation is the only answer, but it's not going to be an easy answer. Making government work has to be our priority. When I took over the school building authority, we didn't get any more money, but we were charged with fulfilling a mandate, paying for schools across the state of Massachusetts that had already been committed to, and then building more with less money. We have $300 million less than we had projected this year for that program, yet we are fulfilling our mandate. Reallocating, making sure that schools are smaller, less expensive, more efficient. We're not paying for swimming pools anymore, and any extravagances, any football stadiums. And I think that we can apply those successes to this area of health and human services, to the needs of the providers, by reallocating our revenue, looking at each and every cost, making sure we're very, very conscious of audits and overprices and things that aren't getting directly to the needs of the people that we hope to serve and need to serve.
Thank you. Val Patrick.
Well, Chapter 257 is about getting at layers of inequity and complexity that go back a long time, decades, back to the time when Charlie was head of HHS and before. And I think we identified some 5,000 different contracts between agencies and providers, and rates frozen for decades, as I mentioned earlier. We identified about a $200 million gap in what folks think the rates ought to be and what they're currently paid. Let me just ask, how many of you here are providers? Now keep your hands up. How many of you think your rates are too high? The point is, we're going to have to do a combination of the things we're talking about here, certainly simplification. But if you think that we're going to be able to make the kind of progress that you need made and that those who serve need made, we cannot right now roll tax rates back. And we better start having that conversation. Because I think we are all of us mature enough to understand those trade-offs. So when we talk about real life, we're going to have to talk about what those trade-offs would mean. I think now is the wrong time, and that we ought to be trying to continue to make progress against the goals of 257. We've made a lot of progress for year one. We have dozens of rates teed up for year two. We have a lot more to do here, no doubt about it.
Thank you. Jill Stein?
Well, let me cut to the chase and say that I'm a number 3. In the 3 options that you put forward, that I would find this money, this $200 million that the governor estimated would be needed to bring these salaries up to a just and fair level. That money is there right now. If you look no further than the film industry tax cut and the biotech, that gets you to $200 million right there. Or the $200 million that the governor's office is currently spending for shopping malls and office parks, which is why, I think this is a question of priorities. And again, when you're told there's not enough money, what you're being told is that there's not enough money for you. The money is there. If you didn't want to take it from those pockets, move to the health insurance bureaucracy. Massachusetts General Hospital and Toronto General Hospital are about the same size, same number of beds. In Massachusetts Hospital, we have about 3 or 4, maybe as much as 500 people shuffling papers to pay insurance companies. In Toronto General, there are 6 people shuffling papers